Hello everyone. Today I'm going to be recording the question 2 on paper 2 Gauteng Prelim exam 2023. The question is for 40 marks and you prescribed to finish it in 35 minutes or less. Question 2, cost accounting. The first one is pretty straightforward. Concept: choose the correct words from those within the brackets. Write only the words next to the question. Right, prime cost is made up of direct labor and direct material. Right, that's the answer. Then advertising part of the selling and distribution costs. Then a variable or fixed cost changes when the quantity of goods produced changes. That's variable. Right, then the next question says you are provided with information relating to JC Electronics for the year ended 28 February 2023. That's the business manufactures LED torches or LED torches. Prepare the following notes to the cost production cost statement. Right, you need to prepare the direct labor cost and factory overheads. Right, there's a lot of marks on the factory overheads, and that means lots of adjustments. Prepare the production cost statement. You only have 4 marks there. That means you're not preparing a full production cost statement. Then information, a stock balances, raw materials opening, that is 2022, and closing, that is 2023. At 1 March 2022, that's the first day of the financial year. Then 28 February 2023, that's the last day of the financial year, so that's the closing balance. We're not given any stock of raw materials. Then work in progress, a work in process stock. Right, we're given only opening of 260,000 and nothing for closing. Then indirect materials on hand, that is factory, is specified. At indirect factory materials on hand, you're only given the closing, which is 11,400. Accrued depreciation on factory equipment, it was given opening balance and closing balance. Then direct labor costs. The bookkeeper calculated the direct labor cost as 1,132,013. However, he made the following errors which must still be adjusted. The salesperson's commission of 8,575 was captured as direct labor. Right, so that's a mistake. It's not supposed to be form part of direct labor, so it's included in the 1,132,013. He captured 225 hours of overtime for production staff using the so this is for production staff, but he used as office staff overtime rate, so we need to calculate an adjustment. Then summary of rates. Right, for overtime, that's what we're concerned about. So normal time is 210. Office staff, there is no. Then sales staff, it's 155. Then overtime for production staff is 320. For office staff is 295. So in this adjustment here, for this one, so what he did, he used this instead of this one. So we need to calculate the difference and add it to the direct labor cost. Right, then it says figures provided by the KIP on 28 February 2023. That's information C. Water and electricity 110,500. Rent expense 133,100. Factory overhead costs. Right, the Bookkeeper calculated the factory overhead cost as 356,310. However, the following adjustment must still be taken into account. So you must take into account the following adjustments. 10% of the water and electricity was used by the office. The factory used the rest. Right, so 10% of the water and electricity was used by the office. Right, the factory used the rest. Then rent was paid until 31 January. Rent is divided among the different sections according to the floor space. The floor space for the premises is 1,500 square meters. Right, and we have sales is 450, office is 450. So together the two, they become 900. So the difference becomes factory. So the difference should be 600. That should be a factory, right? 600 square meters. Right, then moving along, an amount of 8,400 for insurance was accurately transferred to the admission cost account. Right, so it was correctly or accurately transferred. Insurance is allocated in the ratio 3:1:2:1 among the factory, administration and expenses respectively. So normally you follow the way they are written and the way they are written, the ratio is written the way. So factory is 3, administration is 2, then sales is what? 1. Normally they use the word respectively. Right, only 80% of indirect materials was used. Right, 80% of indirect materials was used. Depreciation on factory equipment was correctly updated on the fixed updated on the fixed asset register, but not recorded in the overheads. No assets were disposed of. Total manufacturing costs, right, 3,171,120 after taking into account all adjustments. Then production, 23,750 torches were produced during the year at a unit cost price of 172. Right, see where we can use that. So let's address this question first, then we'll proceed to 2.3. Alright, let's see how we answer this question. Right, so first thing first, where are we starting? Think on direct labor. We're starting on direct labor. Right, this one's already I've already answered them. Right, the first one was no, this one was variable. I think this one was let me just double check. Add variable selling and distribution, the indirect material. Then direct material. Right, calculation. Incorrect total before correction. Right, so this incorrect total, we're getting it from here. Right, this is the amount that we're given at 1,132,000. So the first thing that we need to do is salesperson commission. Right, salesperson commission, that's 8,575. Right, we're subtracting this one. Then overtime. Right, there are two ways of calculating this, right? So you're going to say, because it's 225 hours, right, times 320 minus 295. Right, so the 295, that was one that was used because they used office staff rate, right, instead of using the production staff. So the difference, that's the amount that is not there. There's a longer way. If you're comfortable with that, I'll show you now how to write that one. Then that's 320 minus 295, that's 30. Actually, it's 30. It's 25 actually, not 30. So 25 times 225 times 25, that's 5,000. 625. 5,625. Right, we are adding that. The other way that you could have done, you could have said that to create a mess. But if you say you can multiply 225 by 295 by 225 and subtract it from the 1,132,000, then add back 225 times 320, it still give you the same results because you are removing what will be the error here. So you remove this one that was used by saying 295 times 225, then add the 320 times 225, but you still get the same answer. Right, so the total here will be 1,132,030 minus 8,575 plus 5,625. So here you have 1,000,000 have 1,129,080. Right, so you'll be done with that. So that will be the answer that you're looking for. Then moving on, calculate the factory overhead cost. So you're given that factory overhead cost there. Alright, let's calculate the adjustment that comes with factory overhead cost. This amount you're given already. Right, so let's see the other amounts that comes under that. Right, if you go to the question, right, let's go to the question. Right, factory overheads. Right, you are given water and electricity, then rent expense, then says the bookkeeper calculated the factory overhead cost as 356,310, which is already inserted in our answer book. And however, the following adjustments to be taken into account. 10% of the water and electricity was used by the office. The factory used the rest, so it's 110,500. So that's water and electricity. That's 110,500 times 90%. The reason why I say times 90% because they are telling you that 10% of the water, 10% was for the office, was used by the office. So 1 to 90% of the 110. I to calculate that. Then the next one says rent was paid until 31 January 2023. Rent is divided among the factory, among the different sections according to floor space. So the total floor area of the premises is 1,500, of which factory is 600, office is 450, and sales are 450. Okay, all right. So the first thing that we need to do, we need to calculate. Remember, our year end is 28 February, and rent was only paid up to the end of January. That means there's rent owing. You must always look out for that. They give you dates for a reason, right? They didn't tell you here that there was outstanding rent, but if you are told that rent was paid until 31 January, but your year end, right, which are given here, is 28 February, right? So you must always be careful, with such, especially rent insurance. Always, look closely, read and understand. So if rent was that, so 133, that's for 11 months. So 133, 100 divided by 11, because up to that month is 11 months. So let's see how many months, what was the rental per month, divided by 11, that's 12,100. So 12,100 is owing. So the total rent, right, total rent, remember you have to accrue the outstanding, the rent owing, will be 133, 100 plus 12,100. So you will have plus 133, 100. So that will be 45,000, 145, 145,200. Right. Then, because the question now tells you that rent is apportioned what per square meter. Right. So the total floor area is 6,500. So rent expense that is apportioned to factory will be, so rent that is factory, supposed to be factory rent, right, correctly. Factory rent, that is 145, 200 multiplied by 600 over 1,500, right, and then we'll calculate that right at the end. Then the next one, so we're done with this one as well. Right, we're done with this one. Right, the next adjustment, an amount of 8,400 for insurance was agreed to transfer to the administration cost account. Insurance is allocated in the ratio of 3:2:1 among the factory rent. Right, there are three ways of calculating. I'll write the first one. So it's 8,500. So the one that was transferred to administration is the second one for administration, and the third one. Right, the first one, that's for factory. So what you can do, the shortcut, right, that will allow you to move with speed. You're going to say factory insurance, that is 8,000 times 3/2. That's the most straightforward answer you can have. It will basically allow you to move fast. But if you want to go longer, right, you can calculate the full rent, if that's the easiest way you can understand. So how do you do that? So that will be for the full rent, because remember we are given 2, right? So the total, the denominator when calculated 2 was the total of these, that is 3 plus 2 plus 1, that is 6. So if you say 6/2 times 8,400, this will give you 6/2 times 8,400. This will give you 25,200. Then you apportion this 25,200 in the ratio, right, that you are given. So that will be remember the ratio now you're using this, so that will be 3/6 times 25,200. So this will give you 12,600 to give you the same answer, but it's the shorter way, the one that I used. That was the shorter way, so you'll be able to move fast. Then 80% of indirect materials was used. So 80% of indirect materials was used, right? And we're given the closing balance of indirect material here. Right, this is the closing balance. So 80% was used. So what is the 80%? Right, what is the 80%? So we're dealing with this part here, the 80%. So the 80% will be given by indirect material. That will be 11,400, I think, multiplied by 80 over 20, multiplied by 80 over 20. Right, the same way again, right, you can use a longer way. The longer way will be if you come here, let me just check if 11,400 is correct before I make calculations. Yeah, it's correct. So the longer way will be, you say 100%. Remember, they said 80%, so that means 20% was still on hand, right? So the 100% minus 20, you get 80. So the 100 minus 8, you get 20. So this will be 20% times 11,400. So this will give you the full indirect materials during the year. So that will be 100 divided by 20 times 11,400. So you get 57,000. Right, then you say that 57,000 times 80%. Times 80%, you get 71,250. Then if you come to our answer here, we say 11,400 times 80 divided by 20. Right, something is not right. Now wait, let me see, because I'm getting two different and there's some way where I didn't do things correctly. Let me see. Just a minute. That's 100 divided by 20 times 11,400. It's 57,000. Oh, I see. Then times 80%. Now this is 45,600. I don't know how I punched my calculator. Alright, so here you get 45,600. So that's the shortcut. And then the last one, I think, depreciation on factory equipment was correctly updated on the fixed asset register. So the key term is correct, but not recorded in the overhead note. So it's just basic recording, and we have that depreciation here. Right, so we just subtract this 412,500 minus 242,500. So that is 412,500 minus 242,500. That I factory equip dip. Right, just double check the figures. 42500 to 42500. Right, so that will be the answer. So let's just make the calculation now. I calculated that one. I think that's 110 500 times 90%. That's 99 415. Then 145 200 times 600 divided by 1500. That's 58,080. Then 8400 times 3 divided by 2. That's 12,600. Right. Then 412,500 minus 242,500. That's 170,000. Right, so the total, that would be 170,000 plus 45,600 plus 12,600 plus 58,080 plus 99,450 plus 356, 310. Please don't forget to add this one here. So the total will be 742,040. Right, that will be your answer there. And then they asked you to prepare the production cost statement. So this you already given. Right, so after the total manufacturing cost, the next thing that we have here is opening work in process. Right, we were given the opening work in process as 260,000, or work in progress if you want. That's 260,000, and mind you are adding this. Right, so if you add that 3971 120 plus 260,000 equals, that's 4,231,120. Right, so after that you have to remember we're adding this, then less closing work in process that were not given. But what they did is they gave us this statement here. It was the last one. Right, so this already given is in the solution, right? And they said after all the errors were corrected, then say production 23,750 torches were produced during the year at a unit cost price of 172, right? So that's the total cost of production, right? Because for you to get unit cost, you'll have to know the number of units produced and the total cost of producing all those units. So what you say total cost of production divided by the number of units produced to get this unit cost. So for us to get the total cost of production, basically we're going to say unit cost per unit times the number of units. So this is the one that comes here, total cost of production or total production cost. That will be 23,750 times 172, and this will give you 23,750 times 172. This will give you 4,085,000. Right, so if you subtract this value after adding your production cost, you get your closing work in progress. Right, so that will be minus 4231,120. So that will be 146,120. As you can see, my total cost of production is less than this value at the top, right? So that means you've done the correct thing, right? Then that's it with this question. It was very simple and straightforward, right? Then we'll move on to the next question. Right, looking at the second part of the question. It says Botswana manufacturers here provided with information relating to Botswana manufacturers which produce different products: Botswana handbags and Botswana cell phone bags. Required, refer to the accountant's calculation of variable cost per unit for handbags. Right. Identify the production cost that caused the biggest problem in making the handbags. Right. So you're identifying the production cost. Explain and quote figure to support your answer, and give two possible practical solutions to Botswana manufacturers. Then refer to the accountant's calculation of variable cost per unit for cell phone bags. So the first one is for handbags. Then the second one you're saying give 2 reasons for the decrease in the direct material cost. Right. So you're referring to the calculation. Then perform a calculation to prove that the 2023 break-even point of 51,021 units for cell phone bags, right, is correct. Right, so that's break-even analysis, right, which is total fixed cost divided by contribution. You get it by selling price per unit minus variable cost per unit. Comment on the production levels for cell phone bags. Right, so we are going to comment using this. Should Botswana manufacturer be satisfied with the production levels achieved in 2023 when compared to 2022 quote figures to support your answer? Right, let's look at the information. Right, then you have Botswana handbags. I remember the first key thing that you're asked to calculate: identify 2 production cost statements that caused biggest problem making the handbags production cost statement. So you have the cost, right? Fixed cost is 3,800,000. Then cost per unit, total variable cost per unit, direct materials cost per unit, direct labor cost per unit, then selling distribution cost per unit, then selling price per unit, number of units produced and sold, then break even point. Right, so that's what you have there. Right, then that's for software, and we are given 2 years, 2022 and 2023. So for both cell phone bags and handbags, right, and we are given the break-even point for all of them. Right, so let's try and answer the questions. Just a straight 9 marks. How many marks is this? Right, for the first one, so identify the production cost that caused the biggest problem. Identify the production cost that caused the biggest problem in making the handbags. Explain and quote figures to support your answer. Right, okay, so let's go to the, where am I going? I need to scroll down. Right, production cost. Right, so if you check for handbags, that's what we're looking at, right, for manufacturing handbags. Right, if you check for handbags, we can compare, right, because we have fixed cost, right, that increased as well by 50,000. Right, so fixed cost increased from 3,750,000 to 3,800,000, and we have as well this selling distribution increased by 50 cents, which is a marginal increase. Right, so if you check some of these things, you need to calculate, right? So 50,000 increase, right? It's 50,000 divided by 3,750,000. times 100. Right, so what percentage increase is that? That's 50,000 divided by 3,750,000 times 100. That's 1.33%. And then we calculate this one as well. That's 50. How do I write this one? 0.5 over 10 times 100 over 1 at 0.5 divided by 10 times 100. That's 5%. So you see, sometimes figures, they lie to you, right? Because this is just 0.5, right? And this is 50,000. You always think that 50,000 is a more increase than the the 0.5, but the 0.5 actually, in terms of percentage, that's a significant increase. And then we have this one, right? There is an increase of what? From 60 to 75 for direct labor cost, right? So that's an increase of 15. So that's 15 over 60 times 100 over 1. That's 15 divided by 60 times 100. That's an increase of 25%. So which one caused more? I remember here we just have total variable cost, so they come from this, right? So what caused the most, right? So direct labor cost, right, caused the biggest problem making the end bags, right? Explain. It increased by 25% from 60 rand per unit in 2022 to 75 and per unit in 2023. Right. Then give two possible practical solutions to the Swana manufacturers. Right. Direct labor cost. Right. That might be cause of maybe wastage, or what you call, so wastage can cause production cost to increase, because a lot of material is being wasted, or people are not trained to do what they are doing, so they're taking longer. So what they can do is train workers, right? Supervision, so that workers utilize the normal time and reduces overtime. At what else can be done? Right, it's direct labor cost. Right, direct labor cost. Then improve the machinery used, right? Then maintenance of equipment. Right, if you maintain equipment, right, they function better, right, and then the cost of running them becomes lower. And again, you can ask to remove old equipment and replace them with new equipment that basically have low cost of maintenance or running, right? We can as well maintenance of equipment. Okay, reward employees that are productive. Then change the remuneration to units produced. So basically, you pay employees by the number of units that they produce, right? And those are enough. Any two I will do. Refer to the accounts calculation of variable cost per unit for cell phone bags. Give 2 reasons for the decrease in direct cost. Right, we'll come here. Calculation for total. Refer to the accountant's calculation of variable cost per unit for cell phones. Right. Variable cost per unit for cell phones. Give 2 reasons for the decrease. Right, so you come here, it decreased from 42 to 41. At number 1, direct labor cost decreased, right, from 23 to 20. So there was a decrease in direct labor, right? And what might be the reason for the decrease in direct labor? Because that's one, because all the others increased. Sorry, direct material cost, so not direct labor, right? That's direct material cost that decreased from 23 to 20, right? So what would have been the reason, right? So they say give 2 reasons for the decrease in direct material cost, right? So that may be discounts from suppliers as they are regular customers, right? Then again, they may find that change suppliers and now buys from a supplier that is close by, right? Carriage on purchases reduced. What are the other costs associated with direct materials? So they might change suppliers, receive discounts. Changing suppliers will lead to finding a cheaper supply as well. Right, better quality. Direct material. More skilled. Employees. And those are all things that we can expand and include. Right. Then the next question says, perform calculation to prove that the 2023 break-even point of 51,021 units for cell phone bags is in fact correct. Right. So break-even point, that will be total fixed cost divided by contribution. And contribution basically it's selling price per unit minus variable cost per unit. So this will be total. It's 2,500,000. That's it for cell phone bags. Just check. Break-even point for 5,000 for cell phone bags. That's 2,500,000 divided by 90 minus 41. Right. So that will be equal to 90 minus 41. That's 2,500,000 divided by 49. So that will be 51,020. Right, 51,020. Right, which is this figure here. I just may be rounding off. Right, so 50,020 units. Right, what is break-even? Break-even basically is the minimum number of units that a company should produce if they want to cover all the cost that they incurred to produce a product. So at this point they neither make a profit or a sell. Right, so once they sell anything above that, they start making profits. But 51,021, that is able to cover all the costs incurred to produce the products. Then the next question says comment on the production levels of cell phone bags. Should Botswana manufacturers be satisfied with the production level achieved in 2023 when compared to 2022, and quote figures to support your answer. Right, if you check 2022, we're talking about production levels. Right, so they're saying comment on the production levels for cell phone bags. Right, should Botswana manufacturers be satisfied with the production level achieved in 2023? compared to 2022. That's for cell phone bags, right? Because this question is following up from this question, right? Right, for cell phone bags. Right, so if you open the question, right, in 2022, there were 60,000 units produced. In 2023, there was 70,000 units produced. Right, so the next thing that you need to identify is it viable to increase the units by 10,000, and if so, why? So what we can do here, if you look at the question, right, the break-even point for the 2 years, right, it was 52,632 for 2022 and 51,021 for 2023. So remember, at break-even point, you are neither making profit or loss. So if you can increase the number of units, more units above the break-even point, that's better. So in 2023, Botswana sold more units above the break-even point of 51,021, I think, as they produced 70,000 units compared to 60,000 units in 2022. And the break-even point in 2022 was 52,632. At 52,632. This means they made more profit in 2023 compared to 2022. So the question, comment on the production, should or finally be satisfied. So Botswana should be satisfied with the production level achieved in 2023. Right, fully explained. Right, you can put it in other ways. You can use different ways to answer the question. You can, put the number of units above the break-even, right? Compare the number of units that were sold above break-even in 2022 and 2023, right? So this is provided they sell all the products in 2023. So because if they sell all in 2022 and then in 2023 they only sell 5,000 above the production level, about the break-even point, it means it doesn't really matter how many they make if they're not going to sell them. So you just have to pay attention to the question. It gives you how many units were sold in total for both years. You need to make sure that the comparison looks at that as well, at how many units were sold for 2022 and how many units were sold for 2023 above the break-even point. That will change the kind of analysis that you need to do. So pay attention to the question. All right, so that's the question on break-even point. Sorry, on cost accounting, right? Including the break-even point in the manufacturing account as well, right? Those are easy marks that we can easily maximize on. Right, I hope this was beneficial to you. Please do subscribe, like, and share the video with others. Thank you.